Good afternoon.
Hey, what's up, guys? This is Alex from Xtrades, and welcome back to another weekly trade ideas list. It's been a really long time, about a month, since I've dropped a video. I've been extremely busy. Literally, the beginning of October, we got hit by a hurricane in South Carolina. We were without power for about 12 days, so the whole half of October, I was out of power. Really couldn't do anything about that. And then after that, we got our power back on. I did have to go ahead and start moving and painting our new house. So every day after market hours, I was basically spending that painting, moving all of our stuff into a new house. And finally, we're now settled in. So I'm able to make a video. I'm able to focus more on individual stocks and doing analysis on those. And over the last month, I've really just been focused on futures and trying to make sure I'm making money still, because I do trade full time. So I do have to make sure that I make money in my own account. And then at Xtrades, I do try to help people make money and post my options plays and stuff there too. But I really haven't been able to trade options as much as I usually do. Volume has gone down tremendously on options for me lately. But now I'm trying to get back into it now that I'm able to do analysis again and have more free time. I'm not spending all my time moving and stuff. And yeah, over the last month, you can kind of see like I really haven't really put too much stuff out, to be honest. I mean, we do have a couple, like we had a good FXI put play back at the beginning of October, made like 120% on that. I did end up getting into calls as well. Those are down pretty significantly. Have till December on those. Had a couple of day trades throughout the month. And then really I didn't pick up and start getting back into plays again probably till the last couple weeks, last couple days. So I got a TLT call. I got a new BA call, bought some SMCI shares, a very small amount, and also an AMD call, which we'll go over AMD later. But yeah, you can see, I mean, my activity on the app has really dropped drastically because I really haven't had time to do anything. But now I'm starting to get back into routine and stuff, kind of doing analysis on options and stuff. I've really just been focused on futures, like I said. Had a pretty good payout last month, made about 3K. Withdrew that, as you can see right here from Top Step. But yeah, I've just been kind of focused on futures, making sure I can pay myself because I moved into a new house. So living costs have gone up. Definitely have a little bit more debt now and had to lock in and make sure I'm trading in the morning and then spending all my time after hours, painting and stuff. But anyways, we'll go ahead and get into the economic calendar as we usually do. If you are new to these videos, we go over the economic calendar, we go over seasonality, we go over chart setups, we go over the indexes, we go over a bunch of stuff. So this is the weekly trade ideas video. We are back to making these. So for this week, it's actually pretty stacked. It's probably going to be way more important than the elections for the market, in my opinion. We're going to have the FOMC. It's going to be later Thursday, but here you can see Tuesday ISM services. ISM services always has the chance to make a pretty big move in the market at 10 a.m. Definitely pay attention to that on Tuesday. That's on election day. And then we also have a PMI reading on Wednesday. We do have services PMI. This can definitely move the market. It's hit or miss. Definitely moves the bond market a lot. And then Thursday, the big day of the week, it's going to be the FOMC. I'm pretty sure they're pricing in 25 basis point cut for Thursday. That'd be great if we saw 50. That way we can get the bond market back in order. Ever since the Fed cut rates, they cut 50 basis points. Literally, the bond market has sold off and yields have gone 1% higher. So they cut 50 basis points and then the bond market rallied yields 100 basis points. So it's literally done the opposite of what makes sense. So Thursday is the big day of the week. It's probably going to move the market more than elections, earnings, all that stuff. We did have big tech earnings last week. Really didn't move us that much, surprisingly. We had Microsoft kind of sell off about 6%. We had Amazon do pretty good. Google did okay. Apple ended up gapping down about maybe 2% after earnings. So really didn't get like a big breakout from the earnings. Not really a big sell-off either. There was a little bit of a dip after Microsoft earnings, but overall, I mean, we're still pretty high up. And at the same time, we're not really breaking out on the NASDAQ, and SPY is coming off a 52-week high. It has not continued to break out yet. And then on Friday, consumer sentiment is going to be the only thing important, I would say, on Friday. Maybe a couple Fed speakers could be important afterwards, especially after the FOMC the day after. Like Bowman could say something that could move us, but usually I really only pay attention to Jerome Powell. Sometimes like Neil Kashkari from the Fed will say some good stuff and move the market, but it really just depends on the environment, how the narrative is looking, and how sensitive the market is to Fed talking and Fed data. All right, and before we get into our trade setups, we'll go ahead and go over the seasonality real quick. This is the 10-year data set. It's actually extra bullish this week, November 4th to the 8th. You can see winning trades at 90% over the last 10 years for this period, with a summarized profit of 12%. Very bullish, this little period right here. Definitely keep an eye on that. It's a pretty interesting setup for FOMC coming up. Maybe we'll see a dovish FOMC and the markets will rally. We'll have to see. It's pretty much a coin toss when it comes to FOMC. And then we can just kind of drive this all the way up. This will bring us up to the whole 31 years that SPY has been a thing. So the SPY was created 31 years ago. So this will have 31 years worth of data. You can see winning trades still at 74% over the last 31 years, summarized profit at 10%. So high winning trades, high summarized profit for this period still. Looking pretty good for both seasonality periods, the 10-year and the 30-plus year. All right, let's go ahead and get into some setups for the week. So you saw that I took an AMD contract for January. I ended up just grabbing one of those, but I do like this 141 support. The earnings really wasn't terrible. I think they kind of disappointed on data center revenue and maybe a little bit of their outlook, but really any AI related revenue was pretty good on AMD. It really wasn't a bad quarter at all. Not really enough to, I would say, sell off this much, but market does what it does. You can see they beat on revenue and just slightly missed. It was basically in line on EPS, so it really wasn't bad. Their outlook might have been a little bit disappointing, and like I said, data center as well. But overall, I'm really looking for stuff that's not at all-time highs, because I do believe in the end of year rally, kind of like the Santa rally, December being good, November being good for consumer spending, and you see stocks rally as we see in the seasonality that I just showed you. This whole period from late October all the way into December, usually pretty bullish, really, for tech, for the SPY, really for anything. So I kind of try to find laggers, stuff that's maybe not as high or as overvalued, and I try to get into those for the end of year rally. So AMD is one of those that I'm keeping an eye on, and one that I took a starter position on, one contract for January on calls. So definitely watch this 141s. You have another level at 133s. So 133s is right here, another support right here. That 141s comes from right here, and then you basically have a peak low at 121s down here. So that's another good value area. If AMD did come down to this lower 130s to 120s, that's a good zone to buy at as well. As you've seen in the past, it's bounced pretty aggressively, but hoping for a bounce off this 141s right now. I did just get into it on Friday, so I'm giving it lots of time to kind of just fart around, do what it wants to do. Hopefully FOMC will go good. You'll probably see an everything rally if FOMC goes good and the market's feeling good. You'll see basically the whole chip sector go up. Really anything kind of go up after FOMC if it's good and the market likes it. So that's for AMD. Obviously, it's not the best looking chart. You're kind of buying when people don't want to buy. And that's usually what I like to do. I like to buy at value areas, look for areas that people don't really want to buy it at, because you do get pretty good premiums, and also the dead cat bounces are pretty gnarly, and you'll get some pretty big gains and get a good entry price. All right, number 2, we're going into Nike. So this is kind of a consumer focused play. Obviously, I'm really focused on this play for the holidays, for Christmas. So Nike does very good in November. As you can see in the seasonality right here, it's literally only had 2 red years since 2009 in November, all green. You have a slight red in 2016 and a slight red in 2018, which are very minuscule when you look at them compared to these gains in November, likely because of holidays, consumer spending, people like Nikes on Christmas. So they do pretty good, obviously, on performance in November. December, it's a hit or miss, as you can see. But overall, November, killer month for Nike. You also do have it kind of sweeping the low here. So look at this little pivot at 76.74. So it swept that little low and is now back over that. You also had previous resistance at 75. It's kind of like a double top resistance. Obviously, it's not a confirmed double top, but it rejected twice right here. And I kind of used that as a back test here. So you got 76.74 to 75.34. You got your zone here, and then your old resistance here, kind of acting as a base. So that caught my interest as well. Swept the lows back over, reclaimed support. It's not extremely overvalued. It's not really at highs, and that's a hit or miss, obviously, because you are trending under moving averages. You like to see price getting over the moving averages, making higher lows, higher highs, but that's kind of what you have to deal with when you buy at a value area or kind of buy at a lower price. You are going to be trending under the EMAs, and you do need them to get over to kind of get a trend back going. So that's for Nike. It's pretty simple, kind of a consumer focused play. Hopefully we'll see some good consumer spending these holidays that could gas Nike up. Obviously, one risk with Nike, if Trump does win, you got the tariff issue, because Nike's pretty exposed to China, so that could be an issue. But overall, I mean, like I said, November is really good. I showed you the seasonality. I mean, insane performance. Only 2 red years since 2009. $1.99. So pretty good look for Nike. It's at a decent price. It's not extremely high and it's not extremely low either. So that's for Nike. Looking at calls. Likewise, AMD looking at calls. And on to number 3, we're looking at KO here, or Coca-Cola. So the thing that caught my eye on Coca-Cola was that the RSI is finally at the lowest point it's been since October lows back in 2023. So you had RSI get all the way down to 13 or lower back here at these lows, and now we're at the about 20 mark, so it's below the 30 area, which is considered a little bit oversold when you're using RSI. You also have a pretty nice trend line here. You got a test 1, test 2, now at a test 3. Probably need to fix this a little bit. So yeah, test 1, test 2, now at a test 3. And I just use the magnet tool on TradingView to make sure I have really precise trend lines. So it's at this wick low to this wick low. That gives us this spot right here. So we got KO still over that trend. I would like to see a bounce from here. That would be ideal. There's not really any crazy supports or anything nearby other than that trend line. You do have this kind of old resistance turn to a back test area. So you got kind of a test or pivot off of it right here. Kind of rallied right there. So that 64.30, you could mark that as well. Make sure it holds that 64.30, because if 64.30 breaks, it could flush back down, kind of to these lower levels right here if it goes back under that 64.30. So this is kind of your support back test area you want it to hold, plus the trend line. So definitely watch that on KO. But KO, I'm interested in calls, obviously. You got a pretty low RSI, it could bounce. You have a nice trend line. And overall, I mean, it's not at all-time highs. And like I said, I'm trying to find things that are a little bit more discounted, maybe that haven't been, hitting all-time highs or too expensive right now. And really, even if you look at KO here, every single one of these sharp drops on the 1 month really did get bought back up. I mean, you got a sharp drop candle here, bounce, sharp drop, bounce, sharp drop for a month, bounce. Got a sharp drop for a month back in 2020, nice bounce, another sharp drop for 1 month, bounce. So it's kind of like a pattern, right? You get 1 or 2 months occasionally for a sharp drop, and then it does recover. But yeah, just make sure you watch this trend line. You got a test 1, test 2, now coming for test 3, like I said. So that's for KO. Looking at calls. All right, and on to the indexes. The first one we go over every single time is SPY. So as you can see, we do have a new kind of trend break here. Happened a couple weeks ago. Obviously, I haven't been around, so I haven't been able to cover this little trend line break back when it happened. But this was setting up for some type of flush, and we did get that finally, the last couple weeks. You have a test 1, test 2. Here's the test 3 bounce. Try for a test 4 here. Failed right there. Back test, flush. So pretty textbook, right? You get the first flush. It bounces, recovers, back test the area, and it will flush lower after that. So if you ever get a trend line break like this and it doesn't flush right away, it could be overdue for a back test, and you can enter on the back test before going short. It's one way to go about a trend line flush, but sometimes these do just flush straight, so never know. But for right now, you got key levels at obviously all-time high, so 586 right there. You have a back test area, 574. I've highlighted with the circles, so you got small res, short-term bounce, flush that, and you can see once price actually flushed that 574, the daily candle was very big under that. We can even go to the short-term time frame. Once it lost that 574, flush to get very big. You have a bounce recovery up to 574, is rejected off of that again. That just proves my 574 here is still pretty accurate, probably one you want to mark. You also have 565, arguably the most important level, I would say, of this whole structure. You have a huge drop here, huge rejection, another pretty big rejection, and that was also your breakout point, and also a back test right here. So 565 is huge. So not only is it that big rejection point back over in these sequences here, there's also a big back test level here that led to a pretty good 52-week high, all-time high breakout. So 565, 574, 586 are your big one-day levels you want to mark. So if you wanted to wait for SPY to either get to 565 to buy the dip or scalp calls, you could do that. You could also wait for it to get over 574 to start filling this gap. You could, look at calls then. Obviously, you don't want it looking like this, where it's getting up to 574, closing over it, rejecting, closing over 574 again and rejecting. Probably want it inside the gap, closing inside the gap. Once you start closing inside the gap, then it will fill up the rest. So that's for SPY. Obviously, you have a trend break. You do have pretty solid support below at 565 if it does want to go a little bit lower. Really big flush zone under that. You definitely don't want to lose that. If you see it start losing that, it can definitely get pretty big to the downside. I mean, you're looking at all the way to, 540 or so. This is all kind of like buy imbalance, and under 565, this is kind of free space to fill down. So it's pretty important we hold that. And then, like I said, you could also get bullish over 574 as well. But right now, I really don't like a setup specifically. I do like a setup closer to 565 and also a setup over 574. So watch those. For moving averages, we do have the 38 to 50 EMA cloud here. So we are still holding the 50 and we're still over this cloud. Most importantly, the 50 EMA, which ends right here. So the 38 EMA cloud starts right here, and then it ends at the 50 down here. So this is the 38 to 50, and that's why it creates the cloud. And then likewise, 14 to 21 EMA, 5 to 9 EMA. So you have all your important EMAs just in clouds here. So your 5 to 9, 14 to 21, 38 to 50. I think this is like 90 to 100, and then 180 to 200 down here. So we're still over the 50. As long as we're over the 50, SPY is pretty bullish, I would say. I really don't like this inside bar, this kind of formation. You got a big bearish bar, a big topping wick, and then kind of closing a little bit weak, even after that gap up it had. So definitely be cautious. Obviously, I have no idea how FOMC is going to go, but what I can do is give you these levels to mark, and you can make decisions once we reach them. Like I said, 586, 574, 565, you're a pretty good value area down here to scalp calls. You also have a good plan over 574 to get bullish if it gets inside there. And then big resistance at obviously 586. All right, and on to QQQ or NASDAQ, kind of in a similar situation. We did break trend. You got test 1, test 2, test 3, test 4 bounce. Now starting to break that trend. You can kind of see it bounced off this key level at 485. So 485 was actually a resistance back here. Also a sell-off level right here. It was a kind of a breakout point right here. Also a support right here. And another bounce zone right here recently, again, off 485. So 485, multiple confluence, multiple times we tested it and bounced off of it, rejected off of it. It is a pretty active area, and that's why price keeps, kind of reacting to it. So under 485, pretty big. We want it to stay over 485 to stay bullish, and you also want it reclaiming over trend. So you want it getting back over the trend line or even making a new one. Obviously, it doesn't look promising right now because you kind of back tested the line and you wicked off of it. So you have a daily bar wick kind of rejecting the back end of the trend line that it broke. So not promising. Obviously, it's an inside bar as well. You got the mother bar right here, big bearish bar, and you got the high and low within that mother bar. So what it does here really depends on what it does from the inside bar. So either it's going to flush the low of that inside bar, or it's going to take out the high. If it starts taking out the low of that inside bar, you can probably get a little bit more bearish, assuming you have the right signal on the 15-minute, on the 1 hour. If you start seeing 15-minute bars closing under this inside bar low, or a 1 hour bar closing under this inside bar low, you definitely get bearish and it might flush. Likewise for the upside, 15-minute bars closing over inside bar high. Likewise for the 1 hour, if it can get over that as well, it's pretty bullish, and you also have a gap here to fill. So definitely watch that inside bar, mark the high and the low, keep it simple, and you'll find these a lot on the 1 day. Maybe not even a lot, but occasionally you will find inside bars. Here's another one right here. Once it got over, you can kind of see more volatility. Price got bigger, even rallied all the way up to 500 once it got over this inside bar high right here in this little bar. Obviously, it didn't close good, but that day it did rally to 500. So yeah, that's the most important thing right now. 485. QQQ absolutely needs to hold over that 485. If it breaks under that, I got us down to 475, which is this kind of zone right here, support right there. 475 also comes from this area right here, big rejection zone. So you got a couple confluence areas. You got the rejection zone and support zone right here. So 475, nice area as well for a support. But under 485, that's free space down to 475. So hopefully that makes sense. You're finding key levels by finding multiple times it's touched. You have price clearly reacting to it. Like I said, 485. So 485, we had one right here. We had a reaction right here. We have a breakout right there, and also a support or bounce right there. So you got multiple active areas off of 485 in the past. That's all you do to find key levels. Even if you got one really big rejection too, that works as well as a key level. So like you got 493 here. So that's a pretty good one to mark. Likewise for 498 or 500. Got a big rejection bar here. You kind of see a struggle at that area right there as well. So you're just marking prices where price is clearly reversed up or down, looking for big imbalance areas. That's all you do to find key levels. So that's for QQQ. Like I said, broke trend. We are kind of a little bit vulnerable here. It's a make or break type week. Under 485, big downside. If we do hold over 485, I still see the market as bullish. I'm definitely still leaning towards the bull side. Seasonality tells us that, this is probably the best week we're going to get for the next month or so. This is probably the most high high probability period you're going to get all the way from now to December. I definitely am a little bit biased on that front because we do have the seasonality telling us, and we do have elections, we have FOMC, we have a lot of things, coming up. So really, anything could happen, but I'm kind of hoping for the bull train to play out. Obviously, I'm a little bit more exposed with calls in the market on BA, AMD. I'd like to see the bonds recover. Bonds have been getting blown out. The TLT has been going down. I'd like to see yields come down, calls go up. Just be careful this week. Definitely watch 485. That's a really big zone. If we get back down into it, you could scalp calls off of it. I pretty much update my NASDAQ levels every single day because I trade the NASDAQ futures as well. Definitely been focusing more on futures lately. They've been paying better. There's no theta and stuff. So, but definitely watch 485. I still use the QQQ a lot to trade futures as well. I'll get these 1-day levels and kind of figure out where QQQ is holding, if I should go long the market that day or if I should go short, etc. But 485 in focus. You also have trend line breaking. We do need to reclaim trend, and we'll need to get inside this gap probably. But really nice value area at 485 for scalps to the upside. Likewise, if it breaks 485, really nice opportunity to flush. All right, and last but not least, we're on to the VIX. So this is a pretty easy setup this week. We do have 23, which has kind of been the focus area. I mean, we've had this 23 marked all the way since back here. 23 has just been a factor all throughout this whole period. Once it got over 23 here, really big spike. We have a test at 23 here, big rejection. Another test at 23s right here, big rejection. And another rejection on Friday here. So what the VIX does from here is really going to be huge, to be honest. We really want it to keep rejecting, to keep, the SPY propped up and see SPY rally more after breaking trend. So we really need it to get probably under, that gap up low, which is going to be like 2112. So if you get VIX under 2112, you do have free space down to 18. So definitely watch this gap up low here on this bar. If you get VIX under 21s, that's a really good chance to go lower and see the market go higher. So it's that simple. If VIX does want to get over 23s, it's obviously going to get pretty scary. You have a lot of room up here. Last time I got over 23s with confidence, you can see how it turned out. We got all the way up to 65. This is during the Japanese yen crisis when the Japanese stock market was freaking out and it bled over into our markets. We went all the way to 65, closed all the way at 38. So huge drop just in one day. We did decline all the way to the 14s after that and just kind of been in that range since. Actually, VIX has been a little bit propped. I would say really anything over 18 right now is pretty elevated for VIX, considering how low we've been trading. Before the yen crisis, we were at the 14s, the 12s for months. So we're holding over the 18s and 20s now pretty often. It's kind of been a little bit elevated. So could be due to, the elections and just overall people are getting a little bit confident to hedge, considering how high the markets are now, how high Nvidia is and how high valuations are. People are probably a little bit more scared and ready to hedge their portfolios, and you'll see that demand in SPX puts go up. Once the demand in SPX puts go up, the VIX goes up. VIX moves based off supply and demand on SPX options. But yeah, pretty clear signal here that we could reject off 23s. I mean, I'm really only bearish on the market. Obviously, if SPY gets under 565, you have VIX over 23 and stuff like that. I really like to stay bullish on this market, considering we have such a good opportunity on this seasonality. I mean, this period is just so good, guys. It's all the way up until December. I showed you the last 31 years, it's bullish. Even the last 10 years, it's been really good. 9 of the last 10 years have been bullish. Literally 90% winning trades the last 10 years for this period. And it just goes all the way up into December. Could be different for election years, but we could even look at it real quick. So here's kind of the SPY election cycle. You could see November 4th here, or here's let's go to November 1st. This is kind of where the market bottoms historically on these 4-year presidential election cycles and has a pretty good run. So it pretty much matches up with what we're seeing on the regular seasonality chart. As you can see, all the way up until December, it's pretty much the same thing. So we'll have to see. But hope you guys enjoyed this video. It's been over a month, so hope you guys enjoyed it. Definitely going to be dropping these once a week again, and hopefully the setups will be good for you guys. Hopefully you guys will make some money. Definitely really any setup that I put out, obviously it's just my opinion. It's not a guarantee on direction. Even though if I'm looking for calls or puts, I can be wrong. If you want to see my plays and stuff, or my win rate, anything like that, you can find it on the Xtrades app. I've basically been alerting here since 2019. Have about almost 1,400 trades, about a 67% win rate, return trade average about 7% when you combine everything together. So hope you guys enjoyed. I'm gonna go ahead and get this chopped up, sent out, all that good stuff. Be safe this week, definitely with the election coming up, FOMC, all that good stuff. But I love you guys, and I'm out.
There's a reason why Xtrades is currently the fastest growing application on the market for sharing financial ideas. post. With over $2.5 million paid in the last 2 years to contributors, users are flocking to see what trades the top traders on the leaderboard are sharing in real time. If you're looking to grow your reputation as a trader on the internet or discuss your trading ideas with other reputable investors, click the link below and get connected with a trading mentor today, completely free of charge.